Welcome to OneNorthStar's view on the interest rate environment as it currently stands as we record this in February of 2024. There's been a lot of noise about what the Fed is likely to do, the Federal Reserve in this case, is likely to do over the coming many months. You have pundits who have talked about interest rate cuts happening as fast as in March. You have certain pundits who have talked about there being no interest rate cuts happening in recent times, and there's outlooks both ways. Let us not review those, but let's talk about what could be the potential path of future interest rates, and more importantly, how do they matter to you? Away from mortgage rates and interest card payments, we are focused here on the capital markets. So I'm speaking to those those participants from a capital markets perspective. So from a capital markets perspective, where interest rates go, in our opinion, does not matter a lot. And for that, we know while it might be a little controversial, the point is it's really the interest rate or the yield curve which we focus on, and the steepness of it which we look at. The short-term rates versus the long-term rates. So the difference between the short-term rates, which we measure not as a 2-year rate, but the LIBOR in this case as an example, versus the 10-year Treasury rate. The difference between those two, the steepness of that, the yield curve between the short end, which is what is probably and very likely controlled by the Federal Reserve, versus the long end, which is more controlled by the market in this case, which is made up of many more participants. The difference between those is what we look at and look to see how that might impact the capital markets and returns from our perspective. And the reason for that is very simple. When the yield curve is steep, right, where short rates versus long rates have a large gap, we tend to see, not always, but very many times, value stocks tend to pick up and lead growth stocks in leadership as that happens. So today, in February again of 2024, as we record this, we obviously see growth stocks. In this case, technology has been a huge leader, and then of course many other ones which are more growthy in nature have been leaders today. And so what you're watching very carefully is not so much the path of interest rates by themselves, whether we get cuts or not, but instead the steepness of this yield curve, which is dependent on interest rate cuts on the short end, but also is dependent on how the long rates behave and how that translates to your portfolios that we manage between moving from a growth trajectory to more of a value trajectory. As if you've been a OneNorthStar member, you would know that so far we've always beaten the drums. If you watch our videos in the past, we've talked about growth leading the path forward, and we continue to believe in the here and now that growth will still continue to lead the path forward. However, watch for our coming videos as to when and how we think that there is a transition from growth moving to value as leadership. And why that has less relevancy on interest rate cuts, which we believe we will not get many of in 2024. We will get an interest rate cut, or at least a softening in the language of the Federal Reserve and what they think about interest rates and inflation. But we believe it's more important to watch the yield curve itself, which then lends value to how you position yourself in the capital markets, relative to being heavily weighted in value stocks or in growth stocks. Hopefully this is of use to you, and please look forward to our continuing commentary on the same.